Hello, welcome to this video on capital gains tax. This video is going to look at part disposal of an asset. So normally in capital gains tax you would have an asset that you've bought, perhaps land or property, an investment property, and when you sell it, the proceeds of the sale minus the cost of purchase and any fees associated with purchases are deducted, and then you pay capital gains tax less any allowances on the difference. This is where you've bought an asset, and then 3, 4, 5 years somewhere down the line you've sold part of that asset, and that's what this video is just going to cover. So it's a little nuance within capital gains tax rules. So the key thing here is to look at, well, what was the cost of the asset that you've sold, given that you've bought an entire piece and you've sold part of it. So let's have a look at an example just to explain what the video is going to cover. So let's say a chap comes along and he buys some land, okay? So he buys a plot of land for £100,000 in year 1. A few years later, say year 5, somebody comes along and he makes him an offer, but he only wants half. So say one of his neighbours with an adjoining piece of land comes along and says, I'd like to buy half of your land. So the prices have gone up and he sells half of the land for £80,000. So let's say he originally bought 10 acres. Now he sold 5 acres for £80,000. So he sold half of it, and the price has gone up. So what we need to know is, what was half of the value of the land that he originally bought? And it's not as simple as saying, well, it's half of 100, it's 50. Because land, for example, some of it may be bounded by a road, some of it may be better than others. So the half that he sold isn't necessarily going to be an exact half of £100,000. The 5 acres, if he bought 10 acres initially, the 5 acres that he sold may be more valuable than the other 5 or less valuable than the other 5. So what you have to do is, we know what he sold it for, we know the proceeds. What we have to do is we have to get a market value of the entire plot of land, the entire plot including what he sold and what he's retained at the point of sale. And this is the year 5 market value of all the land. So what we have is, we know we bought the land for £100,000. The neighbours come along and said, I want to offer you £80,000 for half of it, and he's accepted that offer. But what we need also is, we need a market value for the entire land at year 5, and that's £200,000, let's say, for this example. So with the 80 and the 200, what we do is we take a pro rata of what the original cost of land was for the part that was sold. So we take the 80,000, which was the offer for the smaller part, the 200,000, which is the entire portion, put those over each other and multiply them by the initial cost of £100,000. And what that does is, it gives us a ratio of the piece sold to the entire portion, and we're multiplying that by what we bought it for at the start. And that gives us a base cost, sort of a year 1, if you like, a year 1 base cost of £40,000 for the sold portion. So it's a very simple sort of pro rata calculation to do. So now we can say that for the £80,000 that he got for the half of land, that in theory would have cost him £40,000 when he bought it. So now we have a proceeds and we have a year 1 cost. So then we just do a straightforward capital gains tax calculation. So the capital gains tax calculation would just be the proceeds of 80,000 minus the base cost, the assumed base cost, the pro rata base cost, if you like. I'm just going to write pro rata in here. P-R-O-R-A-T-A. The pro rata base cost of 40,000, which is what we calculated, to give us a capital gain of £40,000. And then that gain then will be subject to various exemptions and tax brackets depending on the person's personal tax and their other income. But that's basically how we do a part disposal of land. The key is to try and work out the base cost of the piece that we're dividing off and selling, which we've calculated as £40,000. That then means that the base cost of the remaining piece, the piece that we're holding, must be 60,000, because the two of them together have to add up to 100. So if you like, if you put 120 over 200, that's the value of the piece that we're retaining, So 120 is the value of the piece that we're retaining over 200 times 100. That would be the £60,000 base cost. And if he ever goes to sell the rest, he will use 60,000 as a base for the other half of the land should he wish to sell it. So it's, potentially slightly tricky just to get your head around, but it's a very simple calculation. We just need to get what was the base cost, and for that we need to have a market value of the entire piece, and we need to know how much he sold his piece for as well. Okay, I hope that helps. Thank you.